Hey and welcome to Investing 4.0 Visionary Investing in Future Trends. I just made a video about why I think investing in Chinese stocks is a great opportunity and also posted my videos on Alibaba only to see them drop by about 30% during the last week from their all-time high due to investigations from the Chinese government. But not only Alibaba dropped significantly, also other companies like Tencent, for example, were hit by this news. So as you can see here in the background, no, this will not be a video about Bitcoin. As a quick disclaimer, my next videos will be about Bitcoin as I do not know much about it and I only had a little gambling money invested in the past. And with the current developments, I want to get a better picture to see if I want to invest more or not. So if you are not sure about Bitcoin, stay tuned. I'll probably post 2 to 3 videos to really get a good picture and a good understanding of Bitcoin and if the current investment would be worth it. In this video, however, since I received a few questions from your side, I will explain what is going on with Alibaba and the Chinese investigation and share my point of view. As always, this is no investing advice and is for entertainment and informational purposes only. If you're new to my channel, Investing 4.0 stands for non-hyped and high-quality content. So if you like this video, check out my other videos as well and feel free to subscribe, of course. And please also leave a like to help me out with the YouTube algorithm. For transparency reasons, I want to mention that I'm invested in both companies, Alibaba and Tencent, with 31 shares of Alibaba and 80 shares of Tencent. But now let's begin. Okay, what has happened? While I and you enjoyed our Christmas holidays and I actually wanted to really focus on spending time with the family and not worrying about stocks or finances, well, the Chinese government decided on December 23rd that they are investigating the business practices of Alibaba and Ant Financial or Ant Group. As a result, the share price from Alibaba dropped from about $256 to $212, which is basically the share price from mid of December of last year, or even almost close to the value of summer 2018, and is way below the all-time high of 317 in late October. Yesterday, though, it bounced back to almost $240 already. The share price of Tencent also reacted to the insecurity and fell from $73 to $66, and so did many other Chinese stocks. But what is actually going on right now? It all started with the cancellation of the Ant Financial IPO about 1 month ago after Jack Ma publicly criticized the Chinese government and the banking sector. The IPO was stopped and the investigation started where financial regulators criticized the operations of Ant Financial not sticking to the standards and having the appropriate licenses. Additionally, the Chinese government announced that they want to take actions against companies who, from their perspective, are building a monopoly and are using their power to dictate and control other businesses like vendors, for example. The government started investigations after a microwave manufacturer who is selling and distributing its products via Alibaba also listed them on Tencent, which led to a sudden drop in sales on Alibaba and rose some suspicion. It basically is similar to allegations that we know from Amazon or other sites in the US. And the claim is that Amazon, for example, is pushing their own products based on seller data to beat the competition, which would be an abuse of market position and power. This is actually being discussed in the US, but we currently don't see any action from the US government. The Chinese government, however, seems to be faster as they started antitrust monopoly investigations for Alibaba. Now, in November, they posted a draft on the anti-monopoly regulations. If you want to get a more general understanding about the issue, feel free to check out my previous video that was called Why Chinese Stocks Are Falling. But let's have a quick look on the regulations to see what this could mean for Alibaba right now. The first thing is that the so-called monopoly agreements will no longer be allowed. That means exclusive contracts. For example, that if you want to sell something via Alibaba, you are not allowed to sell it on any other platform. The second one is price fixing will no longer be allowed and will be prosecuted. I think it's easy to understand. The third point is unfair pricing will no longer be allowed. And that means that you will get, for example, a discount if you switch from one platform to another. For Alibaba and Tencent, this means that they could give discounts to steal vendors or customers from the competition. So they can see, let's say another example, I go to a site to JD.com and then switch to Alibaba, and they see that I'm coming from JD.com and then offer me discounts, and that would leave the impression basically that Alibaba is way cheaper than JD.com. And tied to this, the fourth point is that it will further be prohibited to sell products under the production costs, which would be unfair competition in general. To use your market power by negotiating the prices down or even selling below the price that you're buying it for. The fifth regulation is that subsidiary companies need to be independent, like JD Health from JD.com or Ant Group from Alibaba. According to the regulators, this should limit the exchange of data between those two companies, and then also should limit further the unfair pricing. If you want to check out the complete overview, you can find a link to the document in the description of this video. So these are the 5 main points, in my opinion, that directly target the businesses like Alibaba and Tencent. One thing that is interesting, however, and that's really, really important right now, is that employees from Alibaba and also other similar companies say that the points mentioned are actually a normal business practice. So the new law and the regulations might be far more reaching than just to focus on the big tech companies, but also smaller ones or even startups or basically any other company in the sales sector or industry. So why did Alibaba almost fall 30% in between since October? If you ask me, the market just reacted with a big delay here. So what I mentioned in my previous video is still true, and the market just took a little while to actually price it in, as the updated regulations were already published in early November, as mentioned, and were connected to companies like Alibaba and Tencent. So what is important for investors to ask right now is, what is a worst case scenario for Alibaba that actually justifies such an intense drop? For Alibaba, in my opinion, the worst case is actually not that bad, but please think for yourself, make your own assessment here. But these are my reasons. Regarding the exclusive contracts, well, as Alibaba has the highest volume and customer base, I do not see a risk that people would actually switch platforms heavily. Of course, they will offer the products on other platforms like Tencent or so as well, but the pure dominance of Alibaba is a big safety net in my opinion. Now, the second point, and that's basically the 3 points that were mentioned, is pricing. If the regulators really define the price ranges or regulate too much here, that would basically lead to the result that the prices for all platforms would be similar or the same. And who will win in such a case? Yes, the biggest player on the market, which again is Alibaba here. Now, the last one, and that's a funny one in my opinion, is that subsidiaries need to be separate companies. And well, for Alibaba, the Ant Group or Ant Financial IPO was already planned, and it was the goal to separate the company from Alibaba anyways. So what's the deal here? I'm not sure. So if you would need to do it for all subsidiaries, of course, this would be a big project, like lots of administration, but nothing major in my opinion. In fact, a lot of other companies are trying to split their businesses and have separate IPOs, like we see with the German car manufacturer Daimler right now, where the media reported that this week, I think, or last week, that they want to separate their Mercedes-Benz trucks business with an own IPO to collect more money. So it actually has a lot of advantages as well. So what is my summary? I actually used the opportunity and bought more shares from Alibaba and Tencent for about 1,000 euros each. And frankly, I do expect some kind of punishment from the Chinese government, but as it is heavily priced in now and the business model did not significantly change, I do think that this is a perfect price to buy. But please, as mentioned, make your own assessment first. Experts here are not sure if the Chinese government will use harsh measures or not. It is likely that they will do so, like that they will send a message or a signal, like set an example here, but it also might be the case that they don't really want to hurt the biggest and most prominent companies and therefore risk that investors react with fear when it comes to Chinese stocks in general. Now, the question is, what do you think about this development? Are you still invested in Alibaba and Co, or did you use the dip to buy more shares even? Or are you even afraid now of investing in Chinese stocks in general? because yeah, the Chinese government can just put you on the blacklist and that's it. But yeah, please let me know down in the comments below as always. If you like this video, please also subscribe to my channel if you haven't done so already. And yes, please also leave a like to this video to beat the YouTube algorithm. Since this was my last video for this year, it's the 31st, obviously, I want to thank you for your support and I wish you a happy new year. Stay safe, stay healthy, and see you next week and next year when we talk about Bitcoin. That's it for now. I'm out.